Good day, students. Once again, I'll be recording this question 1 on the inventory stock card. And this inventory stock card is for a manufacturing company that is using a periodic inventory system. And we are provided with the transactions that took place during the month of March in the year 2019. And these different transactions took place up until the end of the last day of the month of March, and we are then required to calculate the value of the closing inventory using the first in first out method. Then after, also calculate the value of the closing inventory using the weighted average method. I will not record this one today. I will only focus on the first part of the question because these are two different methods of calculating inventory in the inventory stock card. Now I've already drawn up the skeleton of how the inventory stock card look like, where we have purchases. Then after purchases we do have issues. We have purchases, we have issues where we issue inventory. Then after we have the balance. Now we know that under purchase, whenever we have purchased inventory, that's where we'll be recording. And when we return inventory, also record as negative. Under issues, we issue inventory to the production department, then after the balance. Now let me go through the transactions that are given to us, and I analyze and record them and try to explain as simply as possible. The first date is on the first date of March, where we are given the balance of 5 units at a total cost of 1,750 and 19 units at a total cost per unit of 355 rand per unit. Now we are to record this as opening balances. Remember, first in, first out. The one that is given first must be the one that we record also first. We have balance of 5 units that were bought at the price that we don't know, but the total is 1,750. So we have to say 1,750. We divide this by the number of units so that we get to know how much was the cost for each of the units that are given to us. And again, we have 19 units that are given to us, and these 19 units were previously bought at a price of 355 rands. So now we are given the cost per unit as 355, meaning now we have to say 355 multiply this by the number of the 19 units, which give us the total balance of 6,745 rands. So now remember, this is our opening balance. Our opening balance does not affect our purchase and does not affect our issue at first. Now we know that this opening balance of the inventory is inventory that was bought in the previous period. Obviously, it was recorded as purchase in the month of February, which is the month the transaction took place. Now, in this case, we are just recording the opening balance from the previous period. That means the value of the opening inventory will be the total of the two figures. So now if you are required to calculate the value of the opening inventory, that will be the total of the two figures. But we are required to calculate only the value of the closing inventory, and we know that the closing inventory of this month is the opening inventory of the next period or next month. Now let's go to the next transaction, which is transaction that took place on the 5th day of the month of March in the year 2019. We are told that we issued 13 units to the production department. So now of the 13 units that we are to issue, we need to say we need a total of 13 units. Out of this 13, we must take the first one from the first inventory and the remainder of the 13 to the second inventory. Remember, first in, first out method. So now we say in the first inventory, do we have 13 units? No, in the first inventory, we don't have 13 units. We only have a total of 5 units. So now we need to take the 5, which was bought at 350, the total amount being 1,750. Then after we say, now we need to issue the entire 13, meaning the remainder must be taken from the 19 units that were bought at 355. So now we say, if we only have 5 in the first one, how much do we need in the second one? Minus 13, meaning we need 8 units to be taken from the 19 so that we can issue the total of the 13 units that we are required to issue. 8 by 355, it will give us a total of 2,840 of the inventory that was bought at a price of 355 rands. Now this is the issue of the 13 units. Remember, first in must be issued first in, first out. So we took first the 5, then we took 8 out of that 19, so that the total of the inventory that we have issued is 13. So now make sure that you always issue everything that you are required to issue from the different types of inventory that you have at their different prices. Now this was on the 5th day of the month. Now that we have issued all these 5, that means the remainder of the balance of our inventory will be the 19 minus 8, and it will be 11 units that are left at a price of 355. And you say by 355, meaning we get to 3,905. Meaning this is the inventory now available because we deducted 8 here and we issued all of the 5 for the first price of 350. Now we go to the next transaction, that is in the month of March. Next transaction is on the 7th, where we purchased 18 units at a total cost of how much? 6,480. We purchased 18 units. We go under our purchase column, we record as purchase. It's on the 7th, we purchased 18 units. We're not given the unit price, but 6,480 is the total cost for all these units. 6,840, 6,480 divided by 18 units, it is 360. So now we need to add to our balance, our inventory, where we say there's other 18 units that were bought at 360. Total price for all this is 6,480. So now we have recorded this one in our inventory stock card, meaning also in our storage department or material ledger account. Now we go and listen to the next transaction. Remember, the 18 now is captured or is recorded correctly. Then we go to the next date. The next date is the issue of the 15 units to the production department. Now issue must be recorded under the issue column, and this is on the 10th. How many units were issued? That's the question. We issued 15 units. So now we need to look at how do we issue the 15 units. Previously, how much was issued? Previously we issued 13, then we purchased 18. Now we issue 15 units. Now we say of the 15 units, we need to look at the inventory that is available. First inventory that we have, we must take from that one, and that is not 15, but we need to take all that 11, then the remainder of the 4 must be taken from that 18. So now we say, okay, we issue, this is on the 10th, we issue a total of 15, but we first have to take the 11 units from the first inventory that we have at 355, and that amount to 3,905 rands. Then you say now we need to issue a total of 15 units. So how much is left is 4 units. Now the 4 units that are left must be taken from the 19 units that we have. So now we say 4. At what price was the 19 bought? At 360. So now we say 360 by 4, it gives us 1,440 rands. So now this will be the issue, meaning the whole 11 units are all issued, but now out of the 19 we have not issued all of them. We only took 4 in order for us to issue the total of the 15. That means now our balance of our inventory becomes 14 units because it would have been 18 units minus of those units minus the 4 units, meaning 14 units will be inventory left at 360. So now we say buy 360 to get to our balance of 5,040 rands. So this is the inventory available after we issued a total of 15 units in the order of the 11 that was there first and taking 4 from the remaining inventory that is available. Now we have done that issue. Then now we go and look for the date is on the 10th, don't forget. Now we go and we look on the next transaction. Next transaction, it is a return of the inventory that is returned back to the supplier. And we are returning which inventory? We are returning the inventory that was issued on the 17th of March 2019. And the supplier did not replace this inventory. So this inventory was not replaced, meaning we must take it from our inventory and we give it back to the supplier. Let's look at the inventory that was bought on the 7th. The inventory bought on the 7th is the one that was bought at a price of 360, if you remember, meaning this inventory is still available. So now if this inventory is still available and it is the one that is available in our balance, available after we have issued that 15 units, then we can return this inventory back to the supplier. So now we are returning 3 out of that. Now we are returning 3, and meaning it is a return of the purchase. So now we are returning 3 that was bought at 360, and the total price will be 360 by 3. This will be 1,080 rands. So now you can put brackets there, very important to indicate that this is a purchases return. We are returning inventory back to our supplier, and our purchases are decreasing by the value and the units that we bought. Now we have deducted, meaning deducted 3 units here. The minute we deduct 3 units here, that means we are left with 11 units. And now if we are left only with 11 units, then we need to value how much is the 11 units. 360 by 11, we can say that it is a total of 3,960, where the unit price was 360. So now that is the value of our inventory available after the return of the 3 units back to the supplier, and the supplier did not replace these 3 units, meaning the supplier would have given us our cash back if it was bought for cash. Then now we go on the next date, meaning this date of the return back to the supplier is done. The next date is on the 19th day of the month. On this date, we purchased how many units? 17 units at 370 each. Take note, 370 each, meaning per unit. So now we purchased 17 units. After the return, 17 units at 370. So now we say of the 17 by 370, this will give us 6,290. So now we need to go and add inventory in our inventory storage, 17 units at 370. Therefore now this is 6,290, meaning when we issue our inventory, now we first have to issue this one first and issue this one second using first in first out method. Remember, we are using first in first out method. Now we bought the inventory of the 17 units at 370. That amounted to total of 6,260 rands. Then let's listen to the next transaction. Next transaction is a purchase of 5 units at 375. We purchased 5 units at 375. 5 units at 375. Just want to use the same color of the pen. We bought 5 units at 375. Before that, it is purchase of 5 units. I need to record it first under purchase. 5 units at 375. Now this will be 5 by 375. This gives us 1,875. 1,875. 5 units at 375, which is 1,875. So now this inventory will be the third inventory to be issued. So we have 3 inventories. Now when we issue, we need to first take the first one, then the second one, then after the third one. So now that will be the order when we use our first in, first out method. Now we go to the next transaction. The next transaction is telling us that we issued 21 units into our production department. How many? 21 units were issued to production department. So now we need to issue this 21 units to production departments, or to the production department. Now when we issue, we go under the issue column. Don't forget that we go under the issue column because we are issuing inventory. Now under the issue column, we say how many units must be issued? 21. We look at the inventory that we have available. Of the inventory available, the first one that we must issue, we only have 11 units. So now we take all the 11 units. We say the full 11 we must take, it was at a price of 360. We take the full 11 at a price of 360, and the total cost will be 3,960. And we say we took all the 11 first. Then after we say 11 is not 21, we need a total of how many? 21 units. So now we still need 10 more in order to make it 21, because if you say 11 minus 21, it will tell you that there is still 10 more to issue. So we need 10 more. We look at the second inventory and we say, out of the second inventory, do we have 10 units? Yes, we do have 10 units. So now we can take the 10 units from the available second inventory that was bought at 370. So that we can say 10 by 370, it will give us 3,700 rands. So now we have managed to issue the total of the 21 units as it was planned. Now meaning all of the 11 are taken, but out of the 17 we took 10. That means we are now left with 7 at 370. Remember, we deducted 10 here and we issued it here. So now out of the 17 we are only left with 7 at 370. So now we have to say 370 by 7. This will give us 2,590. And of the 5 units, we did not touch them. They are still there, 375, and this is 1,875. So now it is very clear that we still do have inventory available, and it's in the order of the 7 units at 370 and 5 units at 375. And take note of the fact that we must issue the total of the 21 from the different inventories that we have, because we don't have the first inventory with the total of the 21 units that we wanted to issue. So we had to take the whole 11, then after minus 10 there, so that we get to the 21 that we need. It is very important to be mindful of that. It is very crucial. You issue everything that you're supposed to issue from the different inventories that you have, starting with the first one and second one, then after the third one, to make sure that you issue all the units that you're supposed to issue. Now we go to the next transaction, and saying that we have issued the whole 11 units, we now have to come to the 25th day of the month, where we return 4 units to the storage. We return 4 units to the storage. Remember, we are returning back to the issue. Now we return 4 units. How are we returning this 4? Or which units are we returning? Because previously, if you remember, previously we issued how many? We issued 11 and 10. Now if we are returning back to the storage, now which ones are we returning? Remember, we took inventory from here, we transferred it here, and now we are taking it from here, we're transferring it back. I hope you're clear with that. When we issue, we take inventory from here, we send it to the production department. When we return back to the storage, we're taking from here to, when taking from production department, back to the storage now, meaning the balance will have to increase, because when we issue, balance always decreases. So now the question is, of the inventory that was taken from here and issued in the production department, and now we are saying 4 must go back here, which of the 4 must go back, from the 11 or from the 10? Now remember, when we issue, we said we are using first in first out method. We would have issued the 11 to the production department, and they would have used the whole 11. Then after, they will come and use the 10 units. Then now when they are using the 10 units, they use only 6 out of the 10, and 4 remained, and the 4 was returned. So now we always return also in that order, unless it is clearly specified or stated that we returned 4 units from the 11. If they said 4 units from the 11, then you need to make sure that you return from the 11. But if they don't mention that is from the 11, then you must take from the 10 which was issued last, because that will be the one that they use last and return back to the storage where necessary. Unless it is clearly specified to you that of the 11 units, maybe 4 units were damaged. If they say 4 units were damaged and were returned back to the storage, then there is no need for you to go to the 11. Therefore now you will have to return according to what you are instructed to return. In the case where they don't tell you which one to return, therefore now that is where we need to use the first in first out method, to say they would have used all the 11, and after they used 6 of this, there was a remainder of 4, and it was end of the business day, and they returned that back to us. So now meaning the 4 that we are returning, we are taking it from the one that we gave them last, so they will return that back to us. Now when we return this 4 out of the 10, we look on the inventory that we have and say these units were returned, they were valued at 370, and we still do have inventory that was issued at that price per unit. So now we just need to go and we add it back. If it was not there, then we'll have to record it separately. But there is another inventory that was issued at the same unit cost. So now we just need to go and say of the 4 units that we are returning, we need to say plus 4 to that 7. Therefore now it will give us the new price of the inventory. Now we draw a line there because we are calculating the new balance of the inventory, meaning it will be 7 plus 4. This will give us 11 units at 370. So now we say 11 by 370, this gives us 4070. Then after we say the 5 units are still not touched, therefore now we have 375 units that amount to 1875. So now that is the adjusted inventory available to be issued to the production department. So now this is the balance of the inventory after the return. Don't forget that the return of the 4 must be recorded as negative. I just started the last part, 370. 4 units at 370. 4 by 370. This is 1480. So now this will be the return that is negative under issues, but is added there as 11 in our inventory, which was 7 plus 4 that gave us 11. Now we have recorded that into our inventory and also our returns column, which is the issues returns. Now we have recorded the 4 units that were returned back to the storage, which was on the 25th date of the month of March. Then now meaning the inventory that is available now in our disposal, we have 11 units at 370. Let me just make that 370 very clear. 11 at 370, and we also have 5 at 375. And when we issue, we have to issue in the order of number 1, number 2. Now let's go to the next transaction, which is on the 27th of the month of March in the year 2019. Please do write the dates, they are very crucial. The fact that I don't write is because of the limit in space. Now we purchased 16 units at 365 Rand each. So now we purchased the 16 units. We go to under purchase 16 units at 375 Rand each. So now that means we have to say 16 units by 375 Rand each. This will give us a total cost of all these units. 16 by 375, we get to an amount of 6,000 rands as the value of this inventory. Just verify that 16 units at 365, not 375. It is 365, not 375. We have 365, so our total cost will have to be adjusted. So now we have 16 by 365. This is 5,840. 5,840. Therefore now we need to go and make an adjustment to our total or add our inventory. 16 units at 365. So now this will be 5,840. Now this is the inventory that we bought on the 27th of the month. Then we go on the 29th of the month. On the 29th of the month of March 2019, we issued 14 units, and the 14 units that were issued, they were issued to the production department. Take note of that, to the production department. 14 units were issued. So now we have to look at the first inventory that we have. Remember, the third inventory that we have now is number 3 of the 16 units. And now we're issuing how many? 14 units. Meaning we have to take all of the 11 and take 4, not 4, we need to take 3 here to make it 14. So now we take all the 11 and we take 3 in here. Then the remainder will be the inventory available. Now we issue the whole 11, that is at 370, which is 4,070, and we take 3 out of this 5. We take 3 out of this 5 in order to make it 14, and that 5 was bought at 375. 375, and this will be a total of the 2, 3 by 375. It is 1,125. So now we have issued all of this one. Then we must draw a line and we minus 3 here. So now we need to check at how much is now our remaining balance. We will only have 2 units of the 375 because we took the 3 and they the 3 to make the 14 of the units that were issued. So now we have 2 at 375. Then it will be 2 by 375. This will be 750. Then the 16 units are still not touched. There is still 16 units that are not touched. Of the 16 units that are not touched, they were bought at 365, and this is 5,840. So now that is what we have. 2 at 375 is the balance. I'm just starting a new page now. This is 2 at 375, which is 750, and 16 at 365. Just starting a new page now. 16 at 365 is 5,840. 5,840. Now this is the balance of the inventory we have after we have issued 14 units. And remember, the 14 units were to or had to be taken from the 2 inventory that we have. The first is the 11 that we have taken, and we took 3 to make it 14 here. So the remainder is 2 out of the 375. There we go. And 16 out of the 365. Now we go to the next transaction. Next transaction, there is a return of the 2 units to the storage department. We're returning 2 units to the storage department, returned 2 units to the storage department, obviously from the production department. Now, whenever they are silent like that, they keep quiet, then we know that previously we issued 11 and we issued 4, which total to 14, meaning the production department would have used this inventory first, then this will be used second. Now let us look at how many units were returned. Units that were returned, only 2 units. So now if they returned 2 units, then that means they would have used only 1 here out of the 3. They would have used all of this and used 1 here. Therefore now we're returning at 375. Now the price of 375 inventory, we still do have inventory of 375 there. So now the one that we are returning must be brought back to that 375. Meaning now we have to say under returns of the issues, 1 unit at 375 will be 375. It's negative and it's negative. And this must be added to the same units that were bought at the same price. Therefore now that means we will have to have 3 units at 375, and this will be 375 by 3 units. It will be 1125. The 16 units are not yet touched and they are still at 365. And then we have 365 by 16, it is still 5,840. Now that is the inventory that we have. Remember, whenever there is a return to the storage department, we increase our balance of our inventory, or we add to our inventory. Now it was how many? 2, not 1 that were returned, 2 that were returned. Sorry for that. We returned 2, not 1. So if we returned 2, therefore now this will be 750. This will be 750, indicating that we have 4 units. Sorry for that one. We have 4 units. So now it will be 4 at 375, which will be 1.5. 4 by 375, it will be 1.5. So now this will be 1,500, 1.5. So now we have returned this 1.5. Yes, still remains 750. So now, yeah, that's the only small adjustment that we're making. Now we have returned 2 back to the storage, and we recorded that 2 back to the storage. Now that we have returned that one back to the storage and we have adjusted our inventory accordingly, 2 plus 2, that gave us 4, and another inventory still remain unchanged. Now we go to the next transaction, which seems to be the last one. In the last one, we issued 6 units to the production department. Now when we issue the 6, we know that the 6, we have to take the 4 here, then after we take 2 here, meaning we need to say 4 units and 2 units, and the 4 units are the one that were at 375, amounted to 1.5, and now out of the 16 we need only 2 by 365 because they were bought at 365. So now it will be 365 and give us 730 rands. So now meaning out of the 4 we would have issued all of them. Out of the 16 we only took 2. Therefore now the remainder of our inventory will be 14 units at 365. 14 by 365, it is 5,110. So now this will be the value of the closing inventory. We issued 6 units made of 4 and 2 from the 375 and 2 from the 365. So now to answer the question, we have to specify that the value of the closing inventory is how many units. Value of the closing inventory is 14 units by 365, meaning value of the closing inventory is 5,110, which is 14 units, which is 14 units at 365, friends. Right, there's normally 1 mark or 2 mark to make sure that you respond to the question. Sometimes you don't have to write this sentence. We can also clearly see that this is obviously inventory that is left at the end of the year, which is the 14 units at 365, amounting to 5,110. Yeah, guys, I hope I have made myself very clear in this question in terms of how to record inventory in the inventory stock chart using the first in first out method. With that being said, guys, if you have any questions, don't hesitate to WhatsApp me in my WhatsApp number available on the website. Then I will clarify you where there's a necessity for clarity. Thank you guys very much. God bless you. I'll record the weighted average method later on, probably on the next video that I'll be recording. Thank you guys very much.